Hello, hello.
What's up?
Yeah, how many people gonna get on today? Oh, there's
Could
a
I
few.
invite a friend?
Huh?
Could I invite a friend?
It's a free thing. You can invite anyone you want. Why would they not be in this group though if they're your friend? Is my
He
question.
so he trades usually trades options, and he's been like asking me all the time. He wants to learn this stuff.
Well, here's a great
Exactly.
cost-effective way to learn how to day trade, right?
Right.
Uh, yeah, today's going to be a little bit different. I'm going to do a little ramble and then probably open the floor up. I think there's a couple good stocks that we had throughout the week. I know the week started a bit slow and then it kind of heated up because the week before, last Friday or whatever, was pretty dead. So hold on real quick. All right, sorry about that. The woman's hallmark was too loud. Um, Anyways, yeah, we were coming off a pretty slow week. Monday, I believe, was pretty slow as well. And then I know we had some CPI data, which kind of kicked off the markets, right? Because we had a positive reaction to lower inflation numbers, better than expected, I believe was what the headline was. So Tuesday and on, the market kind of heated up, especially in the blue chip, stuff, large cap. And then, we even seen some really nice movement in the small cap stuff. So anyways, we will get into that. Like I said, stuff I want to talk about. I don't even see the people on here, that maybe should hopefully they watch this later. Because there's a lot of there's a couple things I wanted to talk about today. So this weekend I was bouncing around, spent a little bit of time just watching some other traders that, I've worked with in the past, been, uh around knowing them for years, stuff like that. I've just checked into other chat rooms and all that other stuff, just kind of see how things were going, and uh, where it's always good to have other people's opinions on the market, right, and stay connected, especially to these other other successful traders, and even if they're not successful, just see where the day trading community is. So I'm in pretty much every community out there still. Trust me, I may not be under my Trader McCrum name, but I'm in every group. So I see what's going on out there. I see where everybody is. I see where what traders are working, what they're doing. I see it all, right? And that's just because, like, once again, it gives me an idea of where where the eyes are, where the herd is, and things like that. But what I wanted to touch base on was, if you're a new trader, you know, I'm starting to see a pattern of these new traders that are yet to be successful. And we touched base on it a little bit this week, but just playing the rabbit game, right? There's so many people out there that are not successful, and I just see them like popping up in every single group, and I'm like, what are they doing? And they're chatting it up, talking, doing this or that, and you know one of the biggest rules in trading is focus, right? And I just don't understand why these people that are yet to be successful are maybe more concentrated on maybe getting the recognition from people in the groups and things like that. And I just feel like that's the wrong attitude to have, and I don't feel like you're going to be able to be successful if you're just trying to spend more effort doing that instead of actually staying focused on what's in front of you. You look at the people that are successful. What do they have? They have a great deal of focus. They're focusing on the charts, all that stuff. They're not really caring what people are saying in the chat room. They're not trying to be out there and be the one to get the yippies and the hurrahs of I found the stock, I did this or that. And I think there's some people, maybe not necessarily on this call, but people in this group, I know a few names in here in my group that I also see in other places kind of doing the same thing. And I just, wanted to, voice my opinion on all that. It's good. I think once you get a level head and a strategy that you're successful on, you got your risk reward down pat, you got your patterns down pat as far as, what your edge is and what your strategy, what your money maker, is, and that you can go to. And then it's maybe good that you can jump around a little bit and explore other solutions if you're using it like me to see where traders are and where the herd is and where maybe eyes are. That's all I'm using it for. I'm not using it for to try this person's strategy, that person's strategy, this and that, because as a new trader, you can sit down and watch one YouTube video, and I'm sure some of you are guilty of it in here, and you're like, oh my gosh, that makes so much sense, let me just go do that. And then you try to do that the next day, and you're like, well, why can I trade like that? They just made it look so easy on that YouTube video. And it's just, that's not, there's so many different aspects of that video versus what you just randomly trying it one day and not being successful with it, right? Being patient, waiting for the actual setup, not trying to force it, things like that. So I don't want to ramble on it too much, but I just wanted to touch base. If you are that person and you're finding yourself struggling, maybe look in the mirror a little bit and try to gather yourself, right? You have to test. I agree in testing to find your strategy. But if you've been doing this for, 2 years, 3 years, something like that, and you still find yourself, jumping around and trying to please this community, that community, and all this stuff, look at how much time you're probably spending on that versus actually doing your trading and staying focused on there. So I'm not saying don't contribute and communicate. Like I really do appreciate the people posting stuff, but just gather yourself, really try to dial in. We got the new year coming up. A lot of people can make new, goals and, things like that after the new year. And I just want everybody to, try to settle themselves and, maybe start honing in that skill instead of just waiting for the new year and being like, well, I'm going to wait for, I'm going to wait for the new year and then I'm going to start there. No, don't wait another month and a half. Start now, because it's not a light switch in trading, with discipline, especially. That's something that it takes a great deal of work. I know there's a few of you in here right now that I can pinpoint that, that's their biggest issue is discipline issues. So, it's not something that's going to change overnight. And, so start now, try to regroup and, try to focus on your trading. I like what Ali just says, less chart analysis, more time self-analysis, best loser wins. So, but, well, that's it. So anyways, that's my quick little ramble on this morning. Now let's move into the actual review and see what we can get. So like I said, Monday morning was pretty low. This TIVC was the first one, I think, kick out of the gate. As you can see, it popped up here at 7 o'clock. So it was a 7 a.m. news pop. The stock just ran really with no pullback. Maybe you could have briefly got one in here because we do have this 50 MA here. But I did see, obviously this is Monday, but later in the week, we did see what? Stocks that were just popping right up, running to these massive, like big targets, and then not really giving us a reversal and pullback. So you had to be really, very, very safe and very disciplined if you're trying to play a pullback reversal, which, don't get me wrong, the pullback and reversal is the best buying time. You don't want to be buying at the top where shorters are and, where FOMO buyers are and all that stuff. That's a low probability setup, right? You want to be buying when you start recognizing that the stock is reversing, regardless where it is. In this case, the stock popped up, kind of stalled here at the 50 MA and then ran all the way up through, I think this is 100% line and all the way to 275, pretty much to the T here at the the 200 on the weekly, right? And then that was it. Obviously throughout the rest of the day, it didn't come back up, but that was just where the stock decided to make its trip and then kind of just hang out from there. There was one slight reversal here, right? We came down, tried to reverse here off the 10 EMA, was met with like this doji reversal down, and then we held the 50 MA. This was the support, obviously 50 MA is always going to act as resistance or support. So it's pretty easy to draw your support line there. And then you're just looking for some type of reversal. This had a lot of, fake reversal candles, right? Doji, 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 doji. Look at all this indecision right here. Finally, before we get the actual little bit of volume surge in the reversal out of here. This candle actually opened a little bit red from this candle, but it probably happened right out the gate. So it might have been a bit difficult buying at the end of the 724 candle. You know, just because, like I said, this candle probably opened right at the middle of this doji 221 or maybe a little bit below like 220. So would have been difficult. But if you bought anywhere of here, your risk is low, right? You know, what is your risk if you're buying anywhere here? You're going to be buying 221, 222. Do you think you should be holding this at any time it cracks below the support? You shouldn't, right? That's why dip buys are usually the less risky plays. And I know there's a couple traders in here this week that were kind of voicing their struggles on the calls with some dip buys that they were trying to do. But if I'm going to go into a dip buy, I'm looking, of course, at the entry. But does anybody know what's the first rule you have to do with any trade? Like, what's the biggest thing that you have to do besides trying to calculate where you're going to get out at and your profits and stuff like that? Anybody?
Acknowledge your stop loss.
There you go. Your stop loss. You have to have that plan. That should be your first thing you do on your checklist. If you're making a little step-by-step list on your sticky note next to you, it's okay. If I get in, I'm planning out this trade at 222, where am I going to stop out? Well, you got the 50 MA here at like 214. You got a couple low wicks here at like 209, right? So you would have to decide what is your max percentage that maybe you follow. Maybe there's a dollar amount you follow. Whatever your rule is, will calculate your size that you can build into this position and what you're willing to risk. If you're playing position size and you're trying to only lose, say, $100 is your max tolerance, and you're getting here at 222 and you're only trying to risk $100, does that mean, $100, 10 cents is 1,000 shares, right? So 222, that means that your max risk on this could be 212, right? That would be $100. So if you're trying to play low wick here at 208 or whatever this is, 209, that means you can't take 1,000 shares. That means you have to adjust your size. If you're playing percentage wise, sometimes it could be a little bit easier because the percentages are going to be the same based on, the amount of shares you take each time. So, but you have to have that planned out. We plan that out. We don't react after we get in. So many people, they'll do what? They'll get into the trade. They'll be like, oh, I just bought it. And then they start to think, well, okay, I'm in here. Oh, it didn't go now. Okay, crap. Where am I going to sell at? Where is my stop loss going to be? Okay, I have the 50 MA, I have this. And then they're starting to develop the plan. And I say this almost every week. If you are in the trade and now you are building the plan after you're trading, you're reacting to what's currently going on. You're now planning this trade out, the rest of the trade out, with emotion. 90% of traders in this group right now, hell, even I deal with some degree of emotion. It's the biggest thing to get rid of, but it's emotion. Now you have emotion, affecting where you're going to get in or get out at, right? That's why people, what happens as soon as the stock just quickly pops up and they see their P&L, or maybe they're not even seeing their P&L and they just can kind of do math in their head. They're like, I'm in at 222. The stock quickly pops up to 240. They're like, I'm out. And then what happens? They just sold here into 240. And then what? The next candle. Whoosh, and they're like, oh, darn. It always happens to me. I get out. And as soon as I get out, it pops, right? Well, that's because you're just solely trading off emotion. You're not going, okay, I'm planning. I'm going to buy this dip off the 50 because I see good support there. I'm going to be in about 220. My first target is going to be this 100. Oh, I have this upper resistance, which is a top intraday resistance line. So I'm going to take off partial there. And, this 275 held before. So I definitely need to take some profits there. And then, you know what, if I'm going to hold some more, where's my next target? I got this 307. I got this 318. I got 200% up here. So each one of these lines, when you guys see my care packages, you'll see like each one of these lines that I put out there is also a target, like a additional target zone. And I'm going to be scaling out at each one of these levels. I'm not holding the full, shares that I bought down here all the way up. Rarely do I ever do that, right? If anything, I will, if I still like it and I'm extremely bullish on it, I will rotate, which is a little bit more of advanced, stuff for the average trader. But for the most part, I'm going to be selling out on the way up. I'm never going to be buy the low and sell all at the very high, And if you do, most of the time it's just luck. It just happens. It's not something that you're going to be consistently doing every day. And that's what we want to be doing, is something that's consistent, that you can kind of just get a little bit of a piece, right? Because sure, if I'm ultimately waiting for that for my top sell in this scenario, but I took some off here and maybe took some more off here and that never happened, well, guess what? And then all of a sudden it comes back down to where my original stop loss was here. I maybe sold 25%, sold 25% of my remaining position. That means I got, what, probably like, I don't even know what percentage it would be, but a little bit less, a little bit more than 50% or something like that, around that. Well, actually it'd be a little bit less than 50% of my original position, because it's 25% of position average. This would be where I'd be stopping out on the rest at, right? At the very least. So I wouldn't call this a successful like grand slam, because it didn't get my top target. But sure, maybe up here I stood to made, I don't know, $500, but instead I only made 250 along the way here. And then the remaining shares I sold off there. Well, guess what? $250 is a lot better in your pocket now versus holding it, never getting your top target, and trying to just hold all because you're greedy. And then all of a sudden, what does it do? It comes back down and you stop out for break even, which is still fine. Better than seeing it pop up, it not coming. Maybe like this, what we did, we popped up here, didn't hit that top target, and then it comes back down, and then maybe it cracks, and now you're actually down for a loss. You never want to turn a winning trade into a loss. And what that means is, if you're up on this, and I don't mean up a penny or two, right? There's going to be movement in these candles. We understand that. That's part of trading. But if you're up 20, 30, 40 cents a share and you let it come all the way back down, you better be exiting at break even, right? Because at that point, if this would have came up, right? I mean, disregard over here, which it kind of did that. If this would have came up here and only came up to this point, this intraday resistance here, and then fell back down, the likelihood of this cracking this area of support is also higher. Why? Because we have what? A lower high. Now with a lower high, you have a downtrend. So what is the stock probably going to do? It's probably going to sit here and just trade, make a new low, come back up, make a lower high, make a new low, and it could be what? In a channel, right? We could be in a downtrending channel. So you have to understand that, when you're selling and using these targets. So anyways, the stock popped. I would have been hard to get on this one. We got what? I talk about this every week as well. Why I don't chase up. You got the extension off the 10 EMA, which is my blue line. That's an early signal that's saying, hey, a pullback is probably going to happen. It's just a matter of time. So it could be the candle or next candle. RSI is going to be maxed out on a news pop anyways. Now we get the pullback. Now I'm waiting for some type of reversal. Like I said, that was a little bit difficult maybe there to buy. So I probably would have been watching maybe this test in 240 came back down. So this probably missing that. This would have been the more active signal on my opinion, because this one did not open that way, just reading a stationary chart. So anyways, if you got in here at 234, 235, you're probably looking for 250 first target, right? Then we talked about sell partial. Now you're looking to sell the next partial there. It never happens. What happens? We pop it. We fail to hold above it. It's still holding as resistance. We don't have a full candle above that, and we're rejecting. And this is probably when I would have been, end of this candle, start of this candle, we probably would have seen the bids falling out. I would have been hitting GTFO on my remaining shares and just been like, you know what? I'm out. I'm safe. I'm protected. If the stock wants to hold maybe down here again off that 50 and come back up or show some right type of reversal, I can always get back in. That's another thing that tons of traders always forget about, is they were just holding and holding and holding and holding, especially through like a stop loss. And I'm like, why? The stop loss is just protecting you from further risk, but it doesn't mean you can't get back into the stock. And I feel like a lot of people do that. They do what? They hit their stop loss and they instantly do what? They come up and they change their ticker and they go to next stock XYZ that they happen to see in the chat room or from somewhere else, right? And that causes a shift in focus, and you're losing focus off from this. And that's not what you want to do. It doesn't mean the stock's dead. Obviously, if this was like some knife drop and huge rug pull and it's just tanking and some offering came out, sure, you could argue the stock's dead. I probably don't need to watch this anymore. Like, let's move on. But, top gainer on the day, with news, you can't move on, right? So it did kind of happen here at 7:30 would be the only other problem that I would see. I don't believe I took this trade, and that was probably why, because I don't trade during press release time, just one of my rules. So if I'm not already into a stock and, I see 730 getting, coming out in the next couple of minutes, then I'm probably going to, hold off, just because, even though 730 has been lighter, I know all it takes is one press release at one of those press release times, and whatever the current top one was is just going to fall right off. And I think Rob and Dean, was it? Yeah, I think Rob and Dean did that on Thursday or something, where they both got out right going to a press release time, and it was a right decision, because I think
Yep.
something else
Friday,
came out.
WLGS.
Yeah, something else came out, and they were
Psycho.
protected,
Yeah.
right? So great idea, and great way to play the press release there. So let's see, did anything else happen with the stock? Nope. Came up, tried to break 250 resistance, did actually do it, held up here a little bit more, but we never kind of went above this area. I probably could have argued, I really don't usually use those lines there, but you could say there was some types of resistance here was held back over here. So that's why I failed to pop. And then that was it. We had market open, kind of this fake out breakout candle right there through 250, which, if anybody bought into that, was quickly met with a pullback. And then this is the area of interest that I would have liked to see the stock going. I'm pretty sure I was watching this pretty tentatively here to get in off this reversal, but stock came up at 250 again, and then once it cracked back below, definitely back below VWAP, it was not very good for the stock, right? The stock just went down and down and down and down and down, and nothing really happened on it the rest of the day. So that's another thing. If you're getting chopped up in market open, just wait for the dust to settle. I'm telling you, let everybody and everybody's ideas and the 930 traders and all that stuff get chopped up in this. It's just not, it hasn't been working. Like, give anybody here, give me the last stock that we've seen pop out at 930 and just go on a parabolic move, right? And if you do have one, it's probably like one out of how many that you've been watching, right? So that means the probability of this one being that one that's going to do that move is you're already stacked against you. So, I'm not a big fan of doing stuff that kind of creates bad habits. So, sure, you get on the one that does go parabolic at market open, you're going to be, super happy, maybe make your biggest profit day on the week or month or year or lifetime, who knows? But what's going to happen is now that's going to tell you, hey, I need to start hitting everything, every top gainer at 930. And what happens? You get in fake out and it drops. You take a couple $100 loss. Then the next one, you do the same thing. Next thing, you do the same thing. Next thing, you do the same thing, right? Because only 1 out of 10 say does it. And then before you know it, that thousands of dollars of gains that you made, or maybe $100 gain that you made, is chopped up by $20, $20 loss, and you gave it all back in some, and all you did was, honestly, 9 days of getting chopped up on this in a row or something like that is probably going to just kill your confidence and make you really hate trading, right? We've all been there. Like, I got to shut it off. I'm pissed off, whatever, it could be, you're upset with yourself. You're just not having a good day. You do it on a Friday, then your weekend's, horrible. It's not good. And then it starts to affect your stuff outside of life, maybe your significant other, maybe your family, whatever it is. It's just not a good path you want to go down, right? So let's not start doing stuff that you normally wouldn't do. So I think that's good for any stocks on Monday. Anybody wants me to review before let's go the next day? I said I don't think there was much on Monday. So let's check out Tuesday. Good morning. A decent start to today's market as CPI numbers are out, causing a nice rally for today. We have a few good PRs as well as a 200% plus runner already. So I think this was what? BCDA was the big one on Tuesday, the 14th. Yes, it was. Look at this. So it was actually a continuation off from the night before, right? The day before. So it looks like, oh wait, I'm lying. Is this Tuesday? Let's see. Nope. Tuesday at 7 a.m. There we go. So this was the one. This was one kind of like what we've seen on Monday, right? Where things are just popping and running straight up and no pullback. I mean, this thing opened at 39 cents, ran all the way to $1. over 100%, and it never really had any type of pullback. It didn't even respect the 50 MA. It was just like, yep, you know what? We're going for it. Up and up and up and up, higher low, higher low, higher low, higher low. And you can look over here. Oh, maybe that's too close. Let me fix this. You can look over here, look at how we're just riding the 10, riding the 10, pretty much a little bit of extension starting here. But where does the big extension starts to happen? Right in this area. So you kind of know, hey, you got big extension into what? $1. Everybody should be knowing, regardless if there's chart history resistance there or not, you have to put $1 in your chart and just know it's that target. So big extension, max out RSI into $1 is probably a good idea that, hey, it's going to pull back. Sure, at $1, what were people looking for? We're already up 100%. We're probably looking for what? 200%, this red line, $1.20. And also what's really close up there as well, the 200 on the daily. So 125 was also a great target. So, automatically now you have people say, hey, if this breaks $1, they're just going to buy the high day break and they're going to look for it. Obviously, the smarter traders are probably going to look for some type of pullback and try to get it in lower at the reversal, right? Because the reversal, dip buys, whatever you want to call it, do offer the better trading opportunities because your risk is low. If you're buying the reversal and you're buying the dip off from support, you usually have a very small stop loss versus what? You're buying a $1 breakout, which I like breakouts too. I like rotating through. Usually I'm in lower off the reversal, so I have a little bit of a different risk. But if you're buying here at $1, where's your support at? Your support is still down here. So that means you have all this area, right, of risk on the table versus what? Buying down here off from the reversal, and your risk is what? The crack of the previous low or whatever support level you're playing off from. So I love playing reversals off from a news pop. And if you've been around me for a while, you definitely know that's one of my favorite pre-market patterns. So anyways, we're looking for a reversal. We are below VWAP and we are below the 10 EMA, right? Rarely ever do I also get into a stock that's below 10 EMA just because I use the 10 EMA as kind of my trend line, right? My bullish, bearish indicator, just like I use with VWAP. It's easy to see over here. We're above 10 EMA. We're extremely bullish. What happens as soon as we crack it? We are staying down below it. You can also see what's the stock doing. Look at, see, it's coming up. It rejects, it rejects, rejects, rejects. Still below. Where have we yet crossed the 10 EMA that gives me my true confirmation? Sure, I could be like, well, there's 100% here, so let me just buy the dip off from there. Let me put like a little fishing order there. It's fine. I don't like buying dips off from a red candle. I need a little bit of confirmation. I understand if I'm going to wait for another green candle or two after the low point. What does that mean? That means, yes, if I'm buying up here, now support is still down here. So I have a little bit more risk on the table if I were to down here. But so many times people just, well, the stock's up here. They're like, oh, support's down here. Let me just put an order down there and see if I get lucky. And what happens? The stock comes down, it grabs it. And the next candle is just whoosh, right down through and it keeps going. Just like this stock did not stop at the 50 MA. And you would think, maybe it should from 40 up here to 55 cents. That's a 15-cent move on this cheap of a ticker. That's a big move already. Maybe we should have hesitated. Well, it could do the same thing on the way down. It doesn't have to respect it. So be careful with those fishing orders. I'd rather just be safe and wait for my confirmation. And usually that's going to be the crossover on the 10 EMA off from a reversal or some type of candle, instead of just guessing, right? And I'm sure there's some people guilty here doing that, right? Because if you're like, oh, my support's here at 79.80 cents, I'm going to put a fishing order and it happens. Well, literally the next couple seconds over, you're already below that. And that's, I would probably say this is one of the biggest patterns that I see people turning a dip buy into a bag, because it just is like, as soon as they're in, they're already at a loss and they need to be hitting like GTFO on their keys or putting their order in and selling for a loss. And most of them can't. Most time they're just like, why didn't it hold support? The last 5 did. Why didn't it do it this time? And that's just because, you happen to get on the 1 out of 5 that did work and it went against you. So you can't sit there and be a deer in the headlights. You have to be like, okay, this one didn't work out. That's fine. Let me take my loss and move on. right? You can't be like, well, I'm just going to let it keep going down. My support was here at 80 cents. Now I'm going to turn it into a 50 MA support, another 10 cents lower. Well, 10 cents is a lot for this price stock, right? Because majority of people on a stock below $1, they're what? Able to afford more shares and have a bigger position than if it was a $5 or $8 stock, right? So you you can't do that, right? 10 cents playing on an $8 stock and you're in, smaller shares isn't that big a loss, but you're like, oh, I can finally buy, 2,000 shares. Well, in a blink of an eye, you're down $200. And that's, for some people, that's a lot of money. So just don't be that person. Wait for confirmation. So anyways, I'm waiting for 10 EMA, trying to see, how I like VWAP. I understand some people buy below VWAP, which is, I say it year and year again, like I need to maybe look into this area a little bit more, but just the way I play and how I do it, like it just works for me. So I have nothing against with people that buy below VWAP, to long side. I call you bottom feeders, just kind of joking around. But honestly, that's the other big thing with jumping around to all these other groups and mentors and this and that and people on Stock Twits and YouTube is, so many of them talk that there's only one way to do things, and it's so wrong, right? Just because you don't do things exactly like them, I don't know why they don't like give praise to their members, like that they're being successful and doing something that's working for them. And that's what it is. If it's working for you, don't let me, I'll never tell you that. I might give you my opinion, be like, man, I don't see that working very often. That might be risky. Let's, maybe look into that a little bit more, but I'm never going to tell you if you're found something and you're successful. Rob plays below VWAP all the time. I know Dean does too. So heck, Brownie does. Brown, I always kind of poke at him for it, but what?
I love buying below.
Yeah, but it works for him, right? And he's kind of locking in and honing into that, but, I'm just grateful. So just be careful, don't get into the way like you have to do exactly like whoever you're trying to follow, and they talk bad about breakouts or they talk bad about VWAPs below VWAP or this or that. Like don't worry about it. If it's working for you, keep doing it, right? So anyways, I'm personally waiting for 10 EMA and be above VWAP. Kind of this area we do what? We start kind of closing above the 10 EMA, but since we're so close above VWAP, and I know what shorts are always going to do their work in VWAP. The shorts that shorted here at $1, they don't want it to go up, right? They want it to go all the way back down to 40 cents. They probably think the news is garbage or whatever. Who knows what's going on. They know that CPI data is going to be big today, so maybe it's going to take the attention off from the pennies and the small caps, because everybody's going to be playing Amazon and Tesla and Nvidia and whatever else. And that's very true, especially on CPI days. So the shorts that are up here, the smart ones, are going to do what? They're going to try to keep it below the bearish side of the play, which in my opinion, and also a lot of opinions of, other people that solely rely off and trade VWAP, they know if it stays below VWAP, the shorts are kind of in control. And that's why I use it. If we start crossing above VWAP, there's a very good chance that we could go make our next leg up. So once again, we do cross back above 10 EMA, but since we're so close above VWAP, I personally wouldn't be interested in it until we actually do like some type of VWAP move. And I like the VWAP rolls. In this case, if the stock were to just break through VWAP and keep going and going and going and go up to $1, since I wouldn't have gotten my roll, ignoring this over here right now, just playing, quick little version of it here. If it were to go, I know I would have missed all this. And if I wanted to play, I would have to do my work at $1, which is also what? It's the breakout trade. I know it's higher risk than being down here, or something like that. Doesn't mean you can't play it. Just means you have to be aware and you have to size yourself accordingly, right? A VWAP role play, maybe I was looking to take, $10,000 worth of it down here, and now up here at $1, I'm only willing to take $5,000 worth. You can't have the same size for everywhere on a given stock, so make sure you understand that. But anyways, what happens, right? Let me delete some of this stuff. Stock comes up, starts to kind of do a VWAP roll. 10 EMA is good. and I'm just looking for my reversal. I would have been in over here. Never happened, and we fall back below. But we fall back below. Do we come back down as far, right? Nope. We actually hold a little bit higher. So now we are kind of building a little bit of a higher low. You might even be able to draw a trend line, something like this, and kind of see we're slightly moving up, right? We crack the 10 EMA, come back up. Now we're back up through. And now I'm looking for it to hold. We come up and what? Kind of come right down and test this 10 EMA, but we stay above VWAP. So once again, another higher low. So this right here would have been an ideal entry. If you miss that entry, your next entry would still be $10 if you're comfortable with it, right? Your position size here is different than here. If you're in here, you're selling some into $1. You have to take some off, 10 cents on a 90-cent ticker. That's a big move. So if you're in 2,000 shares, I would probably lock in at least, 500 or somewhere around that, right? So what happens? Come up, we test $1, we pull back, we set up in this mini bull flag. Now we're doing what? Still building higher lows, right? We got volume still in here. We got RSI still at a good point. So everything looks really good. Shorts are starting to sweat a little bit more, right? The shorts, trust me, they can see it. They can be like, oh crap, we didn't crack back below 10 VWAP. The bulls are a little bit stronger now. I really need to do some work at $1. Why do you think you have this quick little wick up and then it comes back down? That's because shorts were probably hitting it there a little bit, right? And on top of that, the people that were selling. So it's the same thing. Bull selling and some shorts probably hitting a little bit there. Pulls back, set up into a pretty nice and easy bull flag. We have a very perfect candle down here, doji reversal. So you got in off this candle, or you simply played the $1, pops up through it, fails to hold, and we set up another mini bull flag. So still any of these entries, you would have been fine. I still would have been possibly selling a little bit if I got in this, depending on where I was. If you're in at 95 cents, I probably would have still sold some into this quick wick up because that's, 10 cents a share. But if you got filled a little bit higher, which is not ideal. Obviously, we're looking at stationary charts, so I don't know where it exactly opened. Maybe you were just holding, right? But at all times, if I'm in here, or I'm in here, or I'm in here, what is the easiest trend to see? The easiest trend to see is just kind of this 10 EMA, right? The stock has yet to fail below it. And at any point, the 10 EMA, honestly, is good risk to base off from, right? And that's going to be where the lows are in these little mini bull flags anyways. A lot of times you won't see me draw a lot of lower trend lines just because 10 EMA usually lines up with it. I know if 10 EMA, we crack back below, we're kind of bearish in the trend. And then I got to see how it does a little bit lower, maybe around VWAP. So anyways, 10 EMA is good risk, right? You're in at $1, you're risking what? 5 cents. You're in at $1, you're risking what? 2 cents, 3 cents, right? You're in down here, 90 cents. What are you? Anywhere, if you're stopping loss at 10 or at the 10 EMA crack here, guess what? You're still out for 3 to 4 cents profit. You're still out for, 5 to 8 cents profit on your remaining shares. I wouldn't hold an entry down from here all the way back down. So not in this particular case. So anyways, the stock keeps going. What are we looking for? Probably this next target, which was 200%, 120, or watching this 10 EMA, right? And look at, now we got our next sell, right? Up there. I didn't, new traders probably, this is where the trading with your P&L comes in. Because if you're in here, in that, traders might be like, oh, okay, I'm out at 110. Blah, blah, and then what happens? All of a sudden it pops up and now it's going to these bigger targets. And the best way to trade into these bigger targets is to have that plan laid out. Hey, I'm going to look for a V, what was I saying over here? I'm looking for it to cross back above 10 EMA and get above VWAP. Okay, boom, it did that. Got my bullish cross right here. I'm in. Now where I'm looking for? My $1, my 200, and my 200 EMA up here. Those are my targets. I don't really care what's going on in no man's land. The only way I care about what's going on in no man's land is how this 10 EMA in this particular case is behaving. So if it did come up here to 109 and say on this candle, we went red doji flat top red, and the bids were dropping out at the end of this candle, guess what? That means my shares from wherever I was in down here, I'm out. Sure, I didn't get my target of 120 or 125, but if it did, that means I sold out at 108. So that's the only reason you had to get on this trade was a stop loss, in my opinion, unless there was some other trend line that I'm missing or something on the chart. But these are my targets, right? 125 comes, you sell. Maybe you're holding some, holding some still, right? I usually just rotate on my 25% sell key, and I'm just waiting for more. I probably have another higher target up, right? 50 MA on the weekly. See how that's already there? And why would I sell any, right? It's still holding 10 EMA, just nice and easy, nice and easy. If we do some crazy crack up here, that's fine. My current last sell was right here at 125. Guess where this 10 EMA is cracking now? Like 123, 122. I'd probably be out at 121, 120. So I'm still pretty much selling on a stop loss my remaining shares at the tops. And what happens? And we're testing, we're holding. This one could have, but it's not what. This is just a touch of it. It's not really a actually open below 10 EMA. And we get a nice doji and we pop, right? Just a nice little bull flag. And there's your next 25% sell key. Now you're still doing what? This thing's still riding the 10 EMA. Is there any really target? Look at, I wouldn't have 145 there yet. That would come after, I'm assuming the stock. The stock stopped there. So, but there we go. That was my next target, 160, right? Which is 200%, now 300%. So after the 50, my next target would have been 160. This 145 line did not come, it was not a target while it was going up. This line was developed after the stock pulled back, right? So what happens now right here, this is probably where I would have sold the remaining shares. So once again, this would have been my last sell. Look at where my stop loss hit, right around this area. So I'm out. I gave it a chance, but I'm out there. What happens? We're going into market open. Why would I start a new position here or anything? We are what? Look at how the stock crossed below the 10 EMA, and look at, even though, yes, there's some support here, but look at, it's still below it, still below it, still below it, still below, below. The stock's downtrend below 10 EMA, and they ride up on 10 EMA. I love that indicator. I don't usually dip buy off from it. I play bull flags off from it, but I don't dip buy off from a 10 EMA. So anyways, market open happens, and what happens? This candle was actually green for a minute, right? You got your fake out, breakout, push up through. I bet you some traders were looking for what? They probably had some type of downtrend, right? And they're like, oh, this is downtrending in market open. I got this 50 EMA on the weekly. Once we break 135, now the intraday target, that now this 145, 146 line comes into effect. And then also what? 300%. We're already up 200%. The people that missed all this are now getting massive amounts of FOMO. And if they're hopping in here at 9 o'clock, what's happening? Fake out, breakout, and they're quickly bought the 135, and then they're flushed all the way back down here, right? And this candle probably caused you to hit GTFO and panic, right? Unless you were standing, a deer in the headlights again, then sure, maybe you miraculously see it come up these next few candles and go back up. And then you're like, oh my God, see, I did it right. No, that was the wrong mindset there. Let the dust settle and then see how it goes. This is still a little bit too early for me because we're only 3 minutes into market open. So, I know I don't think I definitely took this, but, the candles do look good here, right? You got the doji, you got the reversal. You're trying to play 145. It comes up to 145. It rejects that. We still haven't hit 160. And the 145, 146 holds true. We come down. We're trying to hold the 50 MA on the weekly, right? This dash line as support, trying to get a couple reversals, right? And it's not happening. Now people also probably have a different uptrend line, right? Something like this. Oh, okay. Now we see what? The trend line and all that kind of lines up with 300%, but I don't think it happens, right? Stock just stays down. And I think that's all we had out of BCDA for the rest of the day. So you stuck around all afternoon waiting for it, right? We were right around VWAP. This is a really good, if you trade in the afternoon, do your work and see what stocks are hanging around VWAP, because ones that do make big runs like this, I'm not seeing it right now, but eventually you will see the stocks that are consolidating and around support levels and VWAP. You will see what? They'll eventually come up. They'll pop up VWAP. They'll usually do a roll, or sometimes they don't. And then what? They're right back up to high a day. Now you got this big U shape. And then what? They hit the high day. They pull back quickly. They do a cup and handle. And then it's a short squeeze. And then it starts going parabolic, right? This is a very particular move that happens in afternoon trading all the time, especially on top gainers. Right now, I haven't personally been seeing it, but hey, maybe we'll see it this week, right? I don't trade that much in afternoons anymore anyway, so I'll probably miss it. But if it's something that starts happening day after day after day after day, I will change my trading time around because I can be flexible, right? I'm going to trade what the market gives me. If the market's giving us afternoon runners, guess what? I'm going to step in the afternoon and trade it. If it's not, I'm not going to sit here and make my eyeballs bleed all day just because I need to entertain and make content. Like, I don't need to do that. So I'm not going to trade here. Sorry. I'm trading for myself. You guys are just keeping me entertained while we're trading in the morning, right? Because trading is very boring by yourself. So, but I do like most of you here too. So I appreciate you. Any questions on Tuesday? What time is it? 7:46. Maybe we don't. What's some? Let me open the floor up. We got a few minutes left. We can jump ahead. I think BCDA was a really good review. Maybe there's something on Thursday or Friday. Any of you got questions on? Maybe. No. Dean, did you have something? You had something, I thought.
Cyto. It's a real cheap one though.
Cyto, like CYTO.
Yeah, I think that one looks good to run again tomorrow, to be honest.
All right, so it's a Friday mover, it looks like.
Reverse split.
Is it NASDAQ, EDGX,
NASDAQ.
Amex? It's a NASDAQ reverse split play. Is this, oops, wrong button. So that's all it popped from its reverse split is, or it announced one?
I think it already had reverse split in the past.
Huh, I'm not seeing it. I'll have to look in the news, but most time if it just had one, the price would definitely be over $1. So
yeah, it reverse split a year ago.
Oh, so
yeah.
Well, a year ago,
nothing crazy.
It was $6. So
right.
I don't know if that's true, but that's not too high, but I'm sure this thing's had some offerings throughout the time. So you would definitely want to check the float size on it in the last 10Q. But what they probably have, why they might be currently running up, you might also want to check the news and see if they have like a NASDAQ delisting notice.
No, they had a good news report. I'll read it to you. Hold on.
Okay.
I'm a little sick, so don't mind me.
Hey.
Altamira Therapeutics announced partial spinoff of Trio business entered binding agreement for sale of 51% stake. Hold on, I don't think that's it.
I'm not getting.
Oh yeah, Surge is acting
there
to sell 51% stake in Medica.
Huh. Okay. Medica. I also have September 7th. They had this huge offering. Look at all that.
Yeah.
So, and there's a bunch of warrants pre-funded, common warrants, common shares, all this stuff. Public offering price for each common share and warrant is 45 cents.
And that's where
40 cents. Yep. And so we're painting the picture, right? Why did it come up and why is it sitting here stopping right in this area? Because each time it pops up, they were probably, they got to pay for Christmas presents. Come on now, right? Sure. They gotta make their money. They got to take the family and extended family on that, to their new house they got on, what is the fancy island, New York, Manhattan? Is that right?
Yep.
Yeah. So see, there's always a story to this, right? So doesn't mean it can't, right? Eventually what can happen is they sell them all, right? And if buying pressure is still here and there's nothing else to hold it off, sure, then we can keep going. I have lines on this, right? Multiple lines. So this means I've played Cyto before. These lines are not right. I haven't adjusted them. Heck, I got 250 EMAs on the daily on here, but very well could. And what was working that we talked about on last week's call that I said, hey, look for it this week. And I know one person in here did it a couple times or seen it. Anybody know what that was? Maybe I'm being a little bit too vague with it. What did I say? Watch for on previous day runners or things that pop maybe at 4 a.m. What do you want to do at 7 a.m.? if you see them up on the gainers right when they're coming in. It was working really good this past week. You want to look for the 7 a.m. pop, right? For whatever reason, if it was on the top gainers list and if it had news earlier, if it's something that ran the night before, just instantly do what? Treat 7 a.m. as, like a market open time, right? So if the stock's sitting here, most of the time they're going to be sitting down here above, slightly below VWAP or right on it. And what's the risk? If 7 a.m. opens right around that time, 7:01, and all of a sudden you start to see volume coming, it moves up, you can just buy right there, treat it like a news pop play where you just buy right there, and your risk is if it fails. So if it comes back, if you're buying right there and stock comes up and it does like one little candle and then all of a sudden it starts coming back down, boom, you're out. You gave it a chance, right? But you have a very easy defined risk level, because we have seen where 7 a.m. comes, there's no news, and the stock just keeps going, right? And now you're in at the complete low instead of being like, oh, I missed that buy there. Now I got to wait for a pullback. And then you just got to hope that it pulls back and then sets up in some downtrend, flag, triangle, XYZ pattern, and for you to get entry and go, right? You got to hope for that, even though this has happened. So there's really no risk if you have that plan, right? It's been working really well. And there has been later in the week, what happened? 7 a.m., it came out, one candle pop, next candle down. And there has been a couple that failed, and then they calmed down. But if you're treating that break even stop loss there, it works very well. Or maybe even you test some, right? CYTO is a pretty cheap stock, so maybe you can afford 10,000 shares of it or more. Maybe you don't buy 10,000 here. Maybe you'd be like, okay, 10,000 my position, I'm trying to get in. Let me buy 5,000 here. Then it pops up, and then you're looking for your next pattern. Then it sets up your next pattern that you like, and what do? You got another 5,000 there. Now your average is somewhere in here, and now you got a nice position, and you're looking for whatever the remaining plan is. But also, if you're looking to trade CYTO, does this mean you wake up at 7 a.m., then try to chart CYTO? No, you got a head start on it. You should have it already charted out right now. You should have a game plan. Hey, if it holds this overnight, we're holding above VWAP. Maybe I'll try 7 a.m. pop. Where was it stopping? Where was the first intraday support? Okay, it's probably right here around this 42, 43 cents, 45. I know I got warrants, so I got two lines right there. Regardless if I got in here at 32 cents, I'm definitely selling some in there. Okay, where is it going to go next? Well, everybody should know probably 50 cents, right? 50 cents is always an area. And then $1. So I haven't charted anything out. I'm sure there's some chart history lines here, but just off from whole numbers, you got to be watching that, right? So develop the plan early. You don't need to wait till last minute to do it. Don't react. I hate to say don't react to price action, but there is good times that you do want to react, right? If you're waiting for volume to come in, you got to react to volume coming in. So you can't predict when volume's just instantly going to surge in. You can play a pattern, be like, well, I got a triangle break, here I'm looking for this. We're at the end of the triangle. You get in right here. Yes, you would want probably that candle, end of that candle, or the next candle, you'd like to see a volume surge and the stock to go up, right? It's when the stock trades sideways through a pattern that you're watching and no volume comes in. Now you have to start asking yourself, oh crap, what am I going to do? Are you going to, you're in here at 36 cents and it's just trading sideways. Are you going to be fine with it and have a stop loss as soon as if it does crack out? Or are you just going to get out and just be like, hey, I drew something wrong. I might be the only one seeing this. So majority of the time, if there's no volume at the end of the pattern, from my experience, it's not good to trade sideways out of a pattern. So it's better to just cut it and just wait or see maybe what you missed and go back to the drawing board. So, all right. Any other questions on CYTO, Dean? I just don't know what it's going to do past 45. If 45 runs out of warrants there, it might be something. The news seems okay. The problem playing, another problem I have playing day two runners or continuation plays on a stock is the weekend, right? It would be different if this did this like Monday and now we're going into Tuesday, or Tuesday going into Wednesday. But you got a long weekend, and usually Money Monday excites people, right? They want a new fresh batch of stocks. I know I do. I'm always looking for a fresh play on Money Monday. I hate stuff carrying over from the week before. I just usually want that gone, especially if it's a bad week. Just get it out of here. Give me something new and fresh. So I'm assuming most traders have that mindset. So that's my concern with day two runners or continuation plays over the weekend. So be cautious with it, but who knows? Could pop up early. And also, what do we have next week? Next week is going to be kind of choppy, right? Because it's a holiday week. We have Thanksgiving. We have people traveling, people probably leaving early. Volume's going to be real spotty. We are open Friday, I think. I don't trade on Friday of Thanksgiving stuff because, once again, most people are with their family. They're out there, all that stuff. If you're going to stick around and trade, maybe just check out pre-market. But historically, I don't think I've ever made any money trading on a Friday after Thanksgiving. So do if you wish, if you want to, but please stay extremely safe. I do think this coming week, the earlier is going to be the better. So I think Monday, Tuesday is going to be fine, but much after that, Wednesday, you're greatly going to, probably see a decrease, especially into the afternoon as traders are they're leaving early. They got to drive somewhere. They want to beat traffic. They don't want to leave Wednesday at 5:00 to be at their in-laws' place on Thursday, right? They want to leave Wednesday morning or mid-afternoon, something like that, right? So we all know how it goes. So let me see. Any other last questions here? But I think how did Friday? Good morning. A bit all over the place with a lot of random movers, most failing to hold their gains. I look forward to seeing everyone. Yep, Sunday. So it looks like Friday was that. I didn't even trade after market opened on Friday. I was.
Hey, Alan, really quick from Friday, can you hit up, what was it, OPTX?
OPTX? That must have been something different. Like for the afternoon, I'm assuming. What's your question about it? That's what I'm asking. Or are we looking for a possible continuation or seeing what it's got to? Let me look at it here. If you have a specific question about it, though, please ask. Let me go to the daily. Oh, okay. So this looks like it was either an IPO or a SPAC. I can check the news here very quick, but let me just mark up some quick little areas. Looks like 1043 was what the current 52-week high. So we'll mark that up. And now everything else is going to be on the intraday, right? So let's go to intraday. Looks like it had some type of little pre-market pop here. Let me just mark this up real quick, and then we'll see what it looks like. That one's fine. That one's fine. I don't need one there, but let's see how it looks. And then, yeah, and that's it made a new 52-week high, but that needs to stay there. So, well, it looks like it's respecting the levels pretty easily. Popped up here in pre-market for whatever reason. Also, the first little pre-market pop it there. What happened? Market open came. It rejected this area, rejected VWAP. Shorts were starting to stay in control. We finally held and crossed VWAP after how many attempts? Let me see how big that VWAP was. A little bit of a roll, but failed to make a new high there. So this would be a double top, right? Double top. Usually it signifies some type of bearish movement. So that's why always on a VWAP roll, I will sell some into the high of the pole on it. So if you got in here, you would have sold some here, and then you would have been stopping out the rest break even or max risk would crack a VWAP. Crack VWAP doesn't mean it's game over. It's still holding and hanging on. It didn't just go all the way back down. So you still stay focused on it. We're watching, going to back above VWAP, trying to roll again. Cracks the 10 EMA, not the best looking setup, but quickly comes back up. I wouldn't have played there. Came down holding 10, a little bit below right there. I probably would have, how these candles look and how volume I was probably pretty spready, and probably the price, I'm going to say there was a spread on the thing. It would be hard to play this area at all. So once this happens, now you got a volume surge. Now the stock's going back up to 748, 750 area. I probably would have missed this down here, and this would have been my next area that I would have been targeting, the 748, 750, which it does kind of sets up, makes us high into it, kind of makes these tops, and we're kind of a little bit of a bull flag to the 10 EMA. Not any perfect doji reversals off from it, but we do pop it. You could have played a 750 break and then you were good, right? 750, you would have been looking for this 891 target. Obviously, sure, you can play $8, but natural resistance. So that's a good sell into that. And then it comes down, it still holds 750 and goes up, and then we finally get our next sell there, right? That's why I wouldn't have sold anything into here. The only time I would have sold into here is if the 10 EMA cracked and my stop loss was hit, right? I probably would have just used 10 EMA as the trend like we've been doing and just stopping out. So if it popped up here, didn't get to my 891, I would have sold when it cracked here. I do start noticing a little bit of extension on the bodies, but RSI is coming up a little bit, so that's will probably raise my, perk my ears, but overall I'd just be hoping for this 891, and it does come up, it hits, we pull back, we still hold 10 EMA, we come back up, kind of double top, still holding 10 EMA, pull back up, we do what? Third top, double top, first top, right? So this is where I would have been selling out. Probably stop loss was right here when that cracked on my remaining shares from a 750 entry, because I don't think this was very realistic. Sure, in a perfect world, you could say, oh, look at this is where I got in at, because, well, let me tell you, these candles look like crap back there. It would have been very difficult. So anyways, in there, maybe out some here, definitely out some here, maybe some out into this double and triple top, just because that would have not been a good sign. And then stop loss hit on all the rest there. Comes back down. What are we? We're below 10 EMA. Once again, the people that are what? Oh, I'm going to throw a fishing order off the 50 EMA. What do? Comes in, grabs them, goes up. They're like, oh, I'm on top of the world. It's going to work. It's going to work. Do. And it's down. And they had no confirmation. The thing stayed below the 10 EMA. And that dip buyer just got, dunked on, so to speak. Then what happens? We finally come back up. We get confirmation. Now we're trying to do what? Just like we have a VWAP roll back here, you can apply that strategy to a 50 or to a 200. We technically have a VWAP roll, but a 50 MA roll here. This is confirmation. This is holding. I love when there's resistance right above a area of support. Why? Or like a roll area, because usually what happens, you come up, you reject it. Now, if you hold it, that's a real test. If you hold from where you started from, what is that also? That's a higher low. That's a trend line. Now you're probably above 10 EMA. Now you're establishing what? A trend, a new trend. Why? Because you have point A and you have point B. That's how you make a trend line. If you can make a new trend line, that means you have a new trend. So once again, you hold, you're in from here. Now that's a good 50 MA dip buy. Not this. Not this. Maybe if this candle, you can see, let me zoom in here. Anybody see why that would be, the second one would be a possible better dip buy off the 50 than this one?
High or low?
Yeah, higher low, but double bottom, right? Double bottom reversal. So if this would have went in a nice doji, if we would have had some green pressure here and pushed through the 10 EMA, this could have been a very nice buy here, but it didn't. So that's why you got to wait. Because if you've got in here, now you're looking for this to target and sell into. Didn't happen. So unfortunately, if somebody did dip buy off here, they should have been selling if this cracked, not holding this for, 50 EMA cracked, I'm deer in the headlights, now I'm going to turn into a VWAP or 200 EMA. Sure, in this case, they could have held and hoped and eventually been rewarded. But what does that do? That creates bad habits, bad discipline, and now you're going to apply it to everything. And the one time it works is going to be given all back with the 9 times it doesn't. We don't want to do that. So anyways, that's the good, in my opinion, that was the good reversal point there. Another, what? You pop resistance, we come back down, we hold, old resistance becomes new support, nice perfect little bull flag, nice dojis here, reversal, boom, back up. And what are we doing? We're looking for the next sell targets. $10, right? You always got to have $10. Look at, you have a, what is this, 100%. And then this blue line wasn't there. The 52-week high wasn't there. We are already above everything, but now that is there. So if you're in from anywhere, what are we doing? We're boom, 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 and maybe sold some, rotated through here, sold some there. You see the extension off the 10 EMA. You're into a resistance line. You're into $10. You're extended. You have higher RSI. Why would you ever buy? You don't buy a $10 break when you see all that stuff saying don't. You're going to anticipate the pullback because that's what the chart's telling you it's going to happen. You get the pullback and you're watching the 10 EMA. Probably would have, honestly, if I was in that, probably got shaken out in that area.
Let me ask you a question.
Especially that doji, that flat red there. Yeah, go ahead.
So go back to your last bull flag that was successful.
This one or this one?
Yeah, the second, yeah, that one.
Mm-hmm.
So let me ask you a question. Are you getting in on a green candle or on that red candle?
To me, it doesn't matter on the dojis if it's green or red. It just matters what the bids are at the end of that candle. If we're above. So I don't know what this candle came out. It could have actually opened up what, flat green. So how I would have played this is, one, we're already above my the resistance, so we're trying to hold it at support. So I know if I'm playing this bull flag at any moment, if we really start to crack this 891 in area, I don't really want to hold this as my max risk, right? Maybe you can give a little bit to the 10 EMA, but the 10 EMA looks good up here, but while this was setting up, look at where the 10 EMA was. It was actually pretty far down, right? And that's a big 891 down here to 876. So, that's a little bit of, 12 cents or so, 12, 13 cents. So maybe not too big compared to for the price of the stock, but regardless, let me see, 891. Let me do some math here. Let me see, 891.
Well, let me ask you a question.
Percentages, so I would have been, my max stop loss would have been 859, which is well below 10 EMA. So my actual stop loss would have been 10 EMA, not the 891.
Okay. What I see on that is I wouldn't take a candle until it's green, right? Until it closes fully green, no? Because that could be that could still be a lower high. If you look at the last pattern. If you go all the way back.
Oh, like this?
No. Go to your left. Yep, right there. No.
You mean my right?
No, if you look at the first come up, I think it's around $9 where it triple topped.
$9. Okay.
To your left. All the way. Scroll your screen. That area, right.
Mm-hmm.
So technically that's still, because I'd be looking at that and I'd be like, I didn't get over that. That's where I have my issue with. That's where I find myself chasing a lot, is on these bull flags. I wind up buying either too high or I buy too quick and it's a fake out. That's what I have my issue with.
Yeah, well, many bull flags have many different forms. Sometimes they develop in multiple candles. Sometimes they go as fast as like 3 candles, right? So each one of them is going to have their own characteristics. And usually a bull flag is going to develop after the stock is extended. So it's hard. Like, I will miss the bull flag if it pops up and then it kind of flags 2 candles and it's yet to pull back to 10 EMA, allowing RSI to cool off, and then it goes. I won't get in those, right? They're just too high risk, because they usually could do what? Fake out with a quick little wick. And then next thing you know, they're back down to the 10 EMA, which is 10, 15, 20, hell, even 50 cents lower. And per the pattern, the 10 EMA on the bull flag is still kind of where it fails at. So your risk tolerances might already be hit, so you have to sell even though the pattern is still intact. You understand what I'm saying?
Yeah.
And that's not the setups that I like to do, but where I can play it where I know the 10 EMA is squeezing tight, just like you hear Robin, you guys talk about the triangles it went early or it waited to the end. It's the same thing. If you got in here or here, was this 10 EMA squeezing up here? No, look at where this line is. Look at where it has the squeeze, right? So wait for it. Don't get it. If you're going to have FOMO and let emotion get to it, if you're going to trade this, you better be this early off from extension. You better be positioning yourself for the potential pullback, let it set up and then go, right? And you got to be able to stomach that. So if your max risk is $100, that means figure out how many shares you can take to that this may still pull back to 10 EMA, and don't do that. It's
But-
hard on stationary chart to explain it because this, like I said, this candle very well could be a flat bottom green when it first started and then came down and then came up a little bit, right? Because, you know, obviously it came down at some point.
Technically, it was a little too early for your
Mhm.
pattern. Gotcha.
Yeah.
So would 904 be like a better, safer entry?
Oh yeah.
Yeah, because I have either the 896 or the 904.
Well, this was formed here, right? And you could say, you could, I mean, per those rules, sure, you could say there should be well, that would be up here higher, right? Because looking at this, that one's not above, that one's too low. This is the first kind of body that actually makes a high and is above the previous resistance, right? And that's 917. Do you agree with that?
Very good point. I need to look at that.
So if we go back to 917, this one even is sort of rejecting that. But this is what? Some people may not think of it this way, but this is a doji to me. I don't care if it's got a fat body in it. I still do it. I'm still going to put my crosshairs in the middle of this guy and be like, okay, 904 is the middle. Where are the bids at towards the end? And then see. If you're waiting for the candle to close above, I explained this to a few people, is in a bull flag, if you're not in on the reversal candle and you're trying to play the end of the candle idea, you do it back here. But you can't play the 58-second rule or end of candle rule through the high of daybreak on a bull flag, because this is when volume is surging in, right? And it's never going to wait. What's going to happen if you wait for 58 seconds? You're always going to be like, well, it's way up here. It's missed me. And you either have to chase because now you waited till the end of that candle, or you have to just say, hey, I missed it, right? So you can only play that end of candle buying crap down here. And if you're going to be buying the break out of a bull flag, volume surging in, you got to play the volume. This is now you're reacting to the volume. To here, you're being like proactive, right? You're predicting that, hey, I'm going to get in here. That was a perfect entry. The reversal, now it should go. Versus here, it's going. So you got to go with it or you miss it. So, but this is what? This is higher risk. You have two buying points on a bull flag, and I try to teach that a lot. And this is always a lower risk because still, why? If you're in down here, where's your 10 EMA? There's your risk. If you're in up here, at the time, this 10 EMA was further down here, right?
Yeah.
So it wasn't right up here at that time. This 10 EMA wasn't up here until these candles moved over. So you're putting yourself at risk. So this, maybe you can slap with, full size. This, maybe you take only 50% of your position. Different size at different areas. Different patterns have different rules. Different stop loss rules here. Different maybe stop loss rules here. But it pops up, and then you should know where you're selling. You should understand, hey, if I'm looking for a reversal bull flag, this is where the targets that I'm looking to sell. Then where am I going to hit a stop loss? Regardless if it pops up and I'm lazy and I miss it all, I'm now technically in the profit regardless if I locked anything in. I will never turn a winning trade into a losing trade. So even if you fumble and your computer shuts off and things freezes and you turn it back on and then it's at your break even, guess what? You don't hold it and be like, I hope it goes back up. You got to still follow those rules and just be like, yep, I got to cut it. Right. This is a lot of chop here. You're never going to be able to, like, unless you're like doing some candle scalp stuff where you're just playing the 1 minute things. Nobody's really ever good trading at this. This is not a fun time to be in, even though that's pretty good range. You could have traded multiple times from. Heck, if you got the lows down here in the 920s back up to 10, 920s back up 10, 920s back up 10, but it's not very easy. But what does it do? It comes back up. Where are we kind of hitting? $10. I might as well move this to $10, but just because they're natural there. So if this stock holds, we have another candidate for what? A 7 a.m. pop. Was there any news on this, Allie?
I don't recall.
Okay. Well, maybe do some research tonight. See if you like this one. I like the price of it. I don't know what the float is of it
the
or
day
anything
before
like
they
that.
received a contract for 20 biomedical optics.
They have a lot of this.
2400.
Yeah, a lot of Form 4 or 3s, which is just ownership stuff, so you can kind of see where everybody is in at. I don't see any news. So this is another good idea, though. 7 a.m. candidate, you got your areas. PCL line, it is unfortunately going to be what? It's currently red, right? Because PCL is somewhere around here. It closed somewhere in this area. So if you look at the price, say it just closed at $9. Where are we at? We're at 847. So currently the stock is going to be red on the day, opening at 4 a.m. tomorrow morning. So now you'll throw that PCL in there. We'll just pretend it's $9. And at 7 a.m. we're right there. You might get a red to green 7 a.m. pop all there. And what do? You play it. You hope that it keeps going. You have these targets already planned out in your mind. And if the next candle comes back down, you're in at $9 or that PCL, you never want to hold if it goes back red on the day. So you're definitely cutting your losses there, right? So once again, buying those areas have very little to low risk because you're in at the bottom. So anyways, I think this was a pretty good, successful review session. Like I said, I'm going to try to hit it hard early next week. And then I'm probably going to start cutting out, I definitely won't be here Thursday. I won't be here Friday. So I'll probably trade Wednesday morning, see how things are. And then that'll probably be it for me on the week. So once again, I appreciate everybody coming. If you have any questions that I didn't answer, feel free to send me a DM. But other than that, let's get some sleep and let's be back here Monday and let's have a great turkey week. Okay.
Thanks, Seb.
All right. Bye.